Hey guys, Connor from Rock Pokemon coming back to you with another Market Monday. Today we are going to talk about investor psychology and investor behavior and why it's so important to understand how our mental state and our emotional intelligence and our behaviors are important to how we make investment decisions. So, in many ways, we are our own worst enemy when it comes to investing because we tend to make decisions that are emotional, lack objectivity, lack clear factual fundamental evidence, but instead are usually based upon a multitude of factors, including our emotions or our thoughts or our beliefs about something. And a lot of times we will convince ourselves that our belief is indeed a strong factual basis for an investment thesis, for example. On the other end, I guess the other point to make is that, a lot of times we act out of either greed, which we talked about before, which is that idea of us wanting to make a purchase because we can evaluate it and because of our emotional state make some argument in our head that it's a good buying opportunity, or we act out of fear and we sell because we are building up a story in our head that makes us worry more and more and more. So those two factors, fear and greed, become really, really strong components to most investors' failed investments, to say the least. In my job, in my day-to-day life, my job as an advisor is to take the emotion out of investing for my clients, because we know, as history has shown, participants in financial markets tend to love to buy when things are high and sell when they're low and lose money. And so my job is to really mitigate that, keep people invested for the long term, stop them from making, really crucial mistakes that can fundamentally hurt the long-term success of their plan. Because it only takes one or two really bad decisions in your investment career to have a significant effect on, the long-term, wealth potential of your investments. So, we try to mitigate the emotion from investment decisions. We saw this in 2020, March, when the stock market tanked. A lot of people sold out of fear. And obviously, as hindsight is 2020. But if you had even just held through that period, you would have obviously well more than recovered from that previous price level before the bear market. So it's very difficult to mitigate emotions as an investor. And when it comes to Pokemon, like we look at this Charizard, something like this, there's so much nostalgia involved. Especially, up here, this card, this Pikachu, I've talked about this before. There's so much nostalgia in this card for me. I love Pikachu. I love Togepi. It reminds me of the anime. The soft serve ice cream reminds me of, spending time with my dad when I was a kid. There's just so many things about this card that have a nostalgic pull for me. And so in collectible investing, it becomes really, really difficult to mitigate our emotions because there's not only our emotional state, but also our kind of nostalgic historical ties to the items in this hobby. So the best thing I can say is that to mitigate some of that, it's always good to have accountability, right? So have a community that's around you that you can bounce ideas off of. Should I buy this card? Should I sell this card? What do you think? Who can be objective with you, who are also educated participants in the market, Some of my best choices in the collectibles hobby have come out of excellent conversations with people I really trust and people that I know as well as I are students of the market. Um, it's really, really difficult to mitigate those emotions and get talked off the edge, whether it's, hey, I got to sell this stuff right now, I can't hold any longer, or, I really want to buy this card, and convincing yourself that it's a great price. And, 5 years from now, you're going to be really sad when it's 90% of that price. So, and that's all to be said, if you want to just buy a card because you love it, like if you love this card and it brings you joy and it's just a simple purchase it. Now, if it's an investment, you need to be very, very critical of your entry point and where your exit would be, right? And you need to understand all the important factors that go into this card. The scarcity, how big is the population, the quality, it's a 9, but what does the card really look like? How much, try to gauge how much demand there would be for such a card as this. Is it too niche? Is it a good investment that would have a significant amount of demand that will outpace supply? All those factors, and being able to bounce those off others. So something I wanted to touch on with this whole psychology point is something we saw recently, which was the Top Sun Blueback No Number PSA 10 Charizard, which in January sold for $493K, and then the same exact cert sold for $192K just a few days ago. And there's a lot of reasons for this and why it could have happened. Assuming this was the same person, and assuming this purchase in January didn't get traded to someone and that new person now sold this, so obviously things behind the scenes that we can't see. Assuming this person bought here and the same person sold the same card here, why does that happen? Well, this card was pop 1 and now it's pop 2. And what that means is there was only one of these in the world at this time, and now there's 2 of these in the world because another one was graded in a 10 by Rusty at TCA Gaming. So there's a strong case to be made that someone bought into a little bit of hype around this card at this level, right? Potentially a unreasonable price level for such a card, even with that rarity, right? Even with that rarity, is it too niche, right? The Top Sun, doesn't carry the same type of nostalgia as, a lot of the TCG cards, especially English, that people have. So was that, too much of a price? Was, the demand ever going to be there at that price level? And then we come to here and we see, okay, now the rarity aspect, the quality's there, but the demand might not be. And then the rarity, well, now there's 2, right? So the unique factors that could have driven to that price point, coupled with the retrace we've seen in the market, lead us to a place where there was, a very low sale compared to the purchase price, right? So obviously, if this is the same person, they just took a bath, to say the least, on that card, cool 300K. A lot of reasons they could have done that, but I think that, the most important thing that we can learn from this situation is that you need to understand risk, okay? What's the risk of buying a singular card for this price level, right? Because it's not a sealed product, right? We know that with sealed product, the only way that supply can go up is if more is printed. And if it's vintage, we know that isn't happening. But with a singular card, there's always this pop increase risk, right? If the pop goes up, the rarity goes down, right? Rarity goes down. So that's a major factor. Another is a lack of discipline, right? This person could have bought this card here. They didn't understand the fundamentals at this price level, and now they're fearful because this population has increased. Maybe they need the money, maybe they need the liquidity, who knows? Now they've sold it, taking that 300K loss. There could be a lot of reasons they did that, like we said. I mean, not to get complicated, but there could be some things behind the scenes we don't see there. But at the end of the day, this same cert, if it was the same person, sold for $300,000 less. And not understanding your risk and having a lack of discipline, right? A lack of ability to hold on to that card, because maybe we will see it come back here. Maybe this Pop 2 sticks around for 10 years and maybe it established itself as there's only 2 of these in the world. Well, maybe this 192 will be closer to that 500K 5 years from now. But that person was unwilling to have discipline and patience and wait for that card to potentially come back to these kinds of price levels. So, and obviously there could have been extenuating circumstances, right? Some personal need for liquidity. At this point, when we're throwing around these kind of numbers with cardboard, you hope that this person has a higher level of net worth, where this, $300,000 loss isn't a major destructive factor to their overall wealth and plan. But we just don't know, right? This could have been a very, very concentrated bet by someone that really got blown out by this pop increase. So all that to be said, guys, when we look at where we sit today in the market, and we see how people are behaving, whether it's in collectibles or crypto or the stock market, so much of this is driven by investor psychology and investor behavior. And at the end of the day, we end up being our own worst enemy when it comes to our decisions based off of impulse and based off of emotion. So the best advice I can give you to mitigate that is to have accountability, have a great group of people around you who you can bounce ideas off of. And if you're investing, you need to have a disciplined, cohesive thesis. You need to stick to that thesis, and you need to be truthful with yourself, because the only thing you're going to do by building up a false narrative in your head is create detrimental results to your investment plan going forward. So it's another Market Monday. I'm Connor, and as always, collect what you love.